folks? Joe with you here on a Tuesday, September 26th, with a market roundup. Take responsibility for what you get from this class. You guys get it. I'm going to break down some news of the day, which can be construed differently with a different sentiment outlook. We'll talk about it. I got the current market analysis as far as our technical setups as these markets are turning bearish, and trade setups and opportunities as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you're going to see it was a very different day today than it was yesterday. Sometimes these markets like to pause or take a breath before another move to the downside. This is very common in bearish markets or bearish sentiment. So let's just jump straight into it. We finished well over 1% in the Dow and the S&P, just shy of 0.5% in the S&P, and in the Qs about 1.5%. The Russells, the IWM, beautiful trade setup I brought to you guys last Tuesday. Hopefully some of you followed it because this broke down perfectly and is still moving lower, down 1.71% today. Oil, a pop to the upside, a flight to safety. When you get fear, we're back over $90 a barrel, folks, and oil hasn't really ever pulled back. So gold, pretty much down 0.93%, and I do think that has a lot to do with this expected inflation and or rate increases. We are over 4.5% on the 10-year, sitting there right now nicely. So what am I talking about? Let's move over to the daily news here. The markets continue to slide below support levels. Now, when sentiment changes and these levels break, you get two things, and I'll do this again at the end slide here. It triggers stop losses. Once you get a percentage retracement, institutions will dump or hit that cash register money and put it elsewhere. So we do get this snowball effect. When these things break, they break, and they usually slide harder. I would not be surprised to see a gap down or a strong move further down as we break support levels, continuing to the downside. That is definitely very common. Now, with the sentiment change going from super bullish that we were all summer long to, oh gosh, maybe we're not that great in the bearish, it changes the interpretation of some of these economic numbers. Now, a lot of these economic numbers will come as, hey, this is a soft landing. Home sales are still staying up. Employment is still high. Consumers are still spending. Well, when you get a breakdown like this and you see the markets fall apart and you see your portfolio start to go down, all of a sudden that interpretation goes from, hey, the market's a soft landing and strong, to the market might still be too hot. Inflationary worries pop back up again. All of a sudden, hey, we can afford the food, we can afford the gas, and I do have a job, but you know what? Ooh, how long can we last? Because inflation's not coming down anytime soon. See where I'm going with this? It's kind of funny with a different mentality. The same information could be construed as bearish. Government shutdown. We got that all over the place. What, we're 4 days away right now? That becomes more imminent. That becomes more of a problem versus maybe a short-term solution that they could just kick the can down the road here. Also with that higher energy and food costs. So those are just some bullet points. So I'm using this market update here, folks, as just kind of some things to look at and know that there's not a lot of fact behind anything, but the sentiment is what drives the markets, and it's very difficult to follow unless you're just following price action. Let's go to the advanced decline line and the 50-day moving average, 76% declining, 20% advancing, flat. We'll get to the heat map here in a second, but 82% below the 52 moving average, and that number has been pretty bearish for quite some time. And these markets have not really been selling off as aggressively as we've seen over the last couple of weeks, but have been slowly moving lower over the last month and a half. So let's just don't forget that. And this just could be that last construed push to the downside. So let's jump straight into the charts and get a little bit deeper. Now, what I'm talking about is these moves through support levels. Those are big. Now, we did have a pretty good announcement and a pretty good driver to this on Wednesday, carrying into Thursday, and then Friday was basically the, hey, there's confirmation that we are below this move. This is that symmetrical triangle pattern, if you want to call it, that did break on Friday. We did have a pretty key support level here I don't know if it goes exactly with this line. Actually, it does. I just can't draw straight from that far away, folks. But looking into it, we are seeing some pretty good sizable volume when it comes to the sell. So these markets, in my opinion, we're just waiting for a reason to hit that catch register, and it doesn't take much, especially when we're ready to jump ship. Now what we have to worry about is when we start to break below key levels. And what I'm looking at here specifically on the S&P, I've zoomed in a little bit too much, but the 420 mark comes back into play. I know that's 420 and a half, but this comes back into play. And in the Qs, we're right at that level. I'll show you here in a second where we could break too. And what this can do, folks, is trigger stop orders. It can trigger the cascade effect, a snowball effect. And when you get it all hit at once, it falls apart. Now, subsequently, let me move to the Qs here. After that huge sell-off, after the sell orders hit, you get a massive bounce. Corey says something that I love all the time. You get the biggest rallies in bear markets. And what's kind of funny is, if you just take a look at what we saw over here last month, it was a pretty good move off of a pretty good support level. But was it indeed just a bear rally? Well, what I'm seeing here, it could be. Now, this is the level on the NASDAQ, the 400, where it's playing with right now. The Qs, that if it does slip, we could see another round, maybe some higher volume than this, and trigger, sorry guys, Mike, I cannot draw straight today, might trigger another round of selling, which could subsequently be met with a big bounce. But we have to ignore the bounces in the bear markets and look at it as more an opportunity to get more bearish. So today was a pretty obvious day. When you look at this heat map, there was nothing really participating to the upside. Even in energy, you think the flight to safety, most of the time we do get a pretty big push over here to energy, but it didn't participate. The only thing that really moved up was the future price of oil above 90. That's about it. Everything else really just kind of took a kick to the teeth. Where does that leave us? I'm not changing. I actually went to 1.5 here. I did this last week, considering that I was negative 1.5 because I did see it start to roll over. -2 on the month. I was at a 0. I can comfortably move to -2 very quickly, and the reason being is because we are comfortably out of that symmetrical triangle below 2 key support levels. It's very easy to go here. The next thing I'm going to wait for is a little bit more of a slide, maybe back to a larger support level. Expect a little bit of a bounce, and then I'm just licking my chops after that bounce to move this to a -3 for the next push to the downside. There are bearish opportunities. A lot of the bears I talked about last week, or we've been talking about at Maverick, have done immensely well. I just hope some of you guys push some of those buttons. Go back through these courses, folks, and you can see those picks, even if I don't carry them week to week. So that's where I'm at. We're below the 20, below the 50. The slope is starting to go lower, but the 50 is still above that. Actually, no. There's the slope right there. I should actually move that. Look at this. That's slope. So this should be red. Right? Boy, that fell fast, didn't it? Sometimes it catches you off guard. So let's go to what I've got for today. Please go back to these other classes and make sure you're writing down and following along the picks because a lot of them have been working. I moved ABBV and energy. Energy was one that we talked about on the weekend class. I moved it down to neutral just because of where I'm seeing the market slide. I don't think that they're going to fall apart, but I'm going to go more of a sideways to up on these, more sideways. So I just moved them from the bull side down to more of a neutral stance. And that's easy to do, folks, because we want to trade sentiment. I don't really care about the individual stocks at all. I just want to make sure that I'm trading along with the motion of the ocean and put my best foot forward. So let's take a look at that energy trade and some bears as well. The energy trade that we were looking at, it looked like it was a nice little move to the upside, and it looked like it was bouncing off this 20-day, and it did. It followed through yesterday, and then today it's kind of given it up. But I'm still okay with it sideways to bullish. It is above its averages, well, at least above the 50. 20 and the 50 are both sloping higher, and it has kind of this nice little channel going on here. I'll take it all the way back there. So if it can stay right around this level, I'm okay with this kind of sideways. I would be more comfortable if it got above that 39 area for sideways to up. But if you have, I believe we talked about a calendar spread maybe, or a very tight or a very low skew diagonal spread. If you have that, you're probably doing okay. Just be patient with it and see if it can ride out this bearish move in the market. On the bear side, you saw a whole list. There's a bunch, and I had a bunch that I liked. Tech stuff. I liked Apple here, Microsoft, Amazon looked good. Archer Daniels I carried forward from last week, does look good. But this is the type of chart that we're looking for. When the markets are breaking, usually you get your guys that are leading or the bigger ones that are following doing the exact same pattern. Beautiful slope here, beautiful lower high. That's that rally. Biggest rallies and quickest rallies can occur in overall bearish trends. It's not quite a bear trend, it just absolutely broke. So this is a little bit of a breath. It holds itself at this 175. I like to see a little more follow through than that. But if these stop orders can trigger, we can see Apple start to fall pretty quick. So another good opportunity, but look for charts like this. This is just one example of dozens and dozens that are out there. So what am I going to end it with? Well, it's easy. Market sentiment has changed. It's obvious. Keep in mind, the little tip, guys, that all of a sudden bad news is really horrible and good news isn't that great. Sentiment really changes the attitude of the trader. So you'll see things looked into a little bit too deeper, and you can see the fear volume turn up a little bit. So it can increase as we see trades go through the stop orders. Look for gaps and surges lower. Understand that when we do have oversold bounces, it's not a bottom. So don't mistake it for bottoms. You counter trend traders, I know I've got a lot of bearish counter trend traders, but the bull ones get hurt worse. So a lot of traders like to say a bull pullback. They like to, anything that's moving lower, they like to buy. If you try to buy anything that's moving lower right here, or as it moves higher, it really hurts twice as bad. So keep that in mind. You do not want to be counter trending a bear market. Initial jobless claims, GDP revision pending home sales, they're coming out, but it's the PCE, I think, on Friday that might kind of solidify where these markets are going and what the Fed was taking their stance on, thinking that they need to keep interest rates higher for longer, taking off some of the interest rate cuts they were thinking of in the future, late 2024, 2025. We'll see if that PCE number is a little bit higher than expected. Then we might see a Fed get more aggressive, which I think would exacerbate kind of the situation that we're seeing in some of the bear moves over the last few days. Check your potential trades out there. I know Costco came out. It's back and forth. I didn't get the number specifically, but there are some earnings out there that might kind of skew some of the trades you're looking at. But overall, folks, when you get this kind of a bearish feeling in the market, things are usually superseded with the overall motion of the ocean. That's my 2 cents, folks. Thanks for joining me, and we'll talk to you next time. Bye, everybody.